Hello everyone. Before we dive into specific audit types, it is important for an IS auditor to clearly distinguish between audits, assessments, and reviews. Each of these serves a different assurance need, involves a different depth of testing, and may be conducted by internal teams or external service providers. Understanding these differences help auditor choose the right approach, set expectations correctly, and communicate effectively with management. What is an audit? An audit is a structured and formal evaluation where evidence is gathered to determine whether processes, systems, and controls meet defined criteria. Audits typically provide the highest level of assurance because they validate compliance with laws, regulations, policies, or standards, verify the accuracy and reliability of records, assess whether operations are effective and efficient, evaluate whether internal controls prevent or detect undesirable events. Because of this high level of scrutiny, audits also tend to carry a higher negative stigma. People often associate audits with findings, gaps, and accountability. After audit, let's understand assessments and reviews now. Assessments and reviews are generally broader and less formal than audits. They focus on identifying improvement opportunities, such as cost or quality assessments, understanding perceptions and current practices, often through surveys or interviews, supporting management decision making through activities like control design assessment, process reviews, or readiness reviews. For example, a readiness assessment identifies organization readiness with the documentation or identifies control gaps before a formal audit takes place. Because these activities are advisory in nature, they usually carry less stigma than an audit and are often positioned as continuous improvement tools rather than fault finding exercises. IS audit evaluates whether IT system and IT resources are protected, ensuring CIA, while providing reliable information that supports organization objectives effectively. What do we mean by CIA? C stands for confidentiality. Information must be protected from unauthorized access or disclosure. I stand for integrity. Data must be accurate, complete, consistent, and not tampered with. The information you see is correct and trustworthy. A stands for availability. Systems and data must be accessible when needed, without unnecessary downtime. Please note reliability is broader than CIA. CIA ensures information is protected, confidential, accurate, integrity, and availability. But reliability also includes aspects like relevance, timelines, and usefulness, which are not fully captured by CIA alone. For example, a system might be secure, accurate, and available, ensuring CIA. But if it is generating outdated reports, the information is not reliable for management decisions. IT systems refers to applications, databases, operating systems, networks, servers, and cloud platforms. IT resources are broader. They include system, data, infrastructure, people, processes, tools, and third-party services. Simply put, IT systems are a subset of IT resources. There are many types of audit. We will discuss them one by one. Let's start with compliance audit. A compliance audit checks whether the organization is following the rules. These rules may include laws, regulations, frameworks, internal policies, or contractual obligations. Compliance audit often overlap with other audit, but their primary focus is adherence, not efficiency or improvement like in operational audit. For example, compliance with GDPR rules, vendor contracts, or service level agreements. Operational audit. An operational audit evaluates whether day to day processes and controls are effective and efficient. Its objective is not just compliance, but process improvement and performance enhancement. Operational audit focus on how well operation support business objectives. For example, reviewing procure to pay processes, order to cash processes, inventory process, etc. Financial audit. A financial audit examines the accuracy and reliability of financial information or financial statements. It uses two main testing approaches: compliance testing and substantive testing. For example, verifying invoices, collections, payments, etc. are covered in financial audit. Integrated audit. An integrated audit combines financial, operational, and IT audit perspectives. It does not cover compliance audit. It focuses on business risks, IT risks, control design, and operating effectiveness. For example, in O2C processes or order to cash processes, in integrated audit, financial audit covers accuracy of revenue recognition and invoicing. Operational audit covers efficiency of order processing and inventory management. IT audit covers ERP system access controls and data integrity. To report overall process risks, control gaps, and recommendations. The outcome is one integrated opinion giving management a complete picture of risks and controls. Some audits focus on specialized or high risk areas, like third party service audits. Third party service audits are performed on outsourced service providers to assess whether their internal controls are designed and operating effectively. This assurance is commonly obtained through SOC 1 and SOC 2 reports. Fraud audits. Fraud audits detects or identify signs of fraud or suspicious patterns or anomalies. For examples, fake vendors or duplicate payments. Forensic audits. Forensic audits involves investigating fraud, which collects legally defensible evidence for investigations. For example, collecting evidence for a procurement bribery case. Computer forensic audit. Computer forensic audit focuses on digital evidence. It examines devices, systems, logs, emails, cloud data, while maintaining chain of custody and evidence integrity. The emphasis is not just detection, but preserving evidence in a way that can stand up in court or regulatory proceedings. A computer forensic audit may examine laptops, desktops, servers, emails, messaging logs, USB devices, external hard drives, deleted or hidden files, browser history, etc. In summary, third-party service audit evaluate third-party controls. Fraud audit identifies suspicious transactions or fraud indicators. Forensic audit investigates fraud and gather evidence for legal use. And finally, computer forensic audit extract and preserve digital evidence from electronic devices. Next is functional audit. A functional audit checks whether a system or application does what it is supposed to do, as defined in business requirements and functional specifications. It focuses purely on business functionality, not security or performance. Let's take an example of expense reimbursement system. In a functional audit of the expense reimbursement system, the auditor evaluates whether the process works as intended. This includes verifying accurate data entry, correct manager approvals, enforcement of expense policies, accurate tax and reimbursement calculations, and complete audit trails. The focus is on end-to-end process effectiveness and compliance. An administrative audit evaluates the efficiency of support functions such as HR, procurement, and office administration. It focuses on workflow efficiency, documentation quality, approval timelines, and decision-making processes. This audit is not about finances or regulatory compliance. An administrative audit focuses on support functions such as HR or payroll. For example, reviewing payroll administration for policy compliance. Whereas an operational audit evaluates core business processes such as procure to pay cycle to assess efficiency, effectiveness, and control. Last is readiness assessment. A readiness assessment evaluates whether an organization is prepared for an upcoming audit, certification, or inspection. It focuses on control design, documentation completeness, policy and procedure readiness. It does not test full operating effectiveness, but helps management identify gaps early, reducing surprises during the actual audit. Here is a brief summary of the types of financial and specialized audits again. These audit types are frequently tested in the CISA exam, so a clear understanding of how they differ is essential. A financial audit examines the accuracy and reliability of financial statement or financial information. It uses two main testing approaches: compliance testing and substantive testing. Compliance testing, also called test of controls, to verify whether controls are operating as designed. Substantive testing, which directly tests transactions and balances. For example, compliance testing checks whether dual approval was obtained for high value wire transfers. On the other hand, substantive testing verifies whether the transaction itself is valid, accurate, and properly supported by documents. In short, compliance testing checks rules following, while substantive testing checks transaction correctness. If you found this video helpful, please like, comment, share, and subscribe for more content on internal audit, SOX, and risk management. Make sure you tap the notification icon. That way you will get every update and never miss any of the new content. See you in the next session.